If you're a small business owner, 2025 is one of the best years to save money on taxes. Why? Because the IRS just updated Section 179 and bonus depreciation, the two biggest tools that allow you to deduct the full cost of equipment, vehicles, software, and machinery. In this video, I'll break down how you can legally deduct up to $2.5 million and how the 2025 bonus depreciation phase-out affects your business. Grab a notebook. This one step can save you thousands. Target. Section 179, what it really is. Section 179 is a tax rule that allows you to immediately deduct the full purchase price of qualifying business equipment in the year you buy it. Meaning, buy equipment, use it in business, deduct 100% today. No waiting, no slow depreciation over 5 to 7 years. Increasing chart. Section 179 limits for 2025. The IRS increased the limit to fire $2.5 million 2025. This means you can deduct up to $2.5 million instantly. The phase-out starts once you buy more than $4 million in business equipment. Tools. What qualifies under Section 179, you can deduct machinery, office equipment, computers, servers, tools, HVAC, work vehicles over 6,000 pounds, software, furniture. Does not include land, buildings, inventory. Bonus depreciation explained. Bonus depreciation is a second tool that lets you deduct a percentage of an asset that doesn't fall under Section 179. But here's the catch. Bonus depreciation phase out. 2022, 100%. 2023, 80%. 2024, 60%. 2025, 40%. 2026, 20%. 2027, 0%. So if you're planning a large purchase, 2025 is a strong year to claim the 40% benefit. Section 179 versus bonus depreciation. Use Section 179 first. Use bonus depreciation afterward for extra savings. Section 179 is limited. Bonus depreciation has no cap. Smart business owners use both together. Real examples. Example 1. Trucking business. Buy a $120,000 truck over 6,000 pounds. Section 179, deduct full $120,000. Tax savings, $24,000 to $36,000, depending on bracket. Example 2. Office setup. $15,000 computers, $8,000 desks, $5,000 software. Total deduction, $28,000 instantly. Example 3. Manufacturing. Machine cost, $500,000. Section 179, $500,000 deducted. Bonus depreciation, additional 40% if needed. IRS mistakes. Buying equipment but not placing it in service. Using the equipment partially for personal use. No documentation or proof. Not tracking mileage for vehicles. Depreciating assets incorrectly. Keep receipts. Keep invoices. Keep usage logs. Final strategy. Here's the smartest way to maximize your 2025 deductions. Use Section 179 first. Then apply bonus depreciation. Make purchases before December 31. Document everything. Use AI tools for record keeping. Talk to a CPA before year end. 2025 is a powerful year. Don't leave money on the table.